RIM TV coverage of the 2015 RIMS conference is brought to you by Inform Applications. The Affordable Care Act is transforming the healthcare and health insurance industries, but as you'll see in this interview with Jessica Smythe, the impact of the ACA is also affecting workers' compensation, when new reporting procedures are being implemented for insurers. She is a Medicare Secondary Payer Act compliance consultant with ISO Claims Partners and had this to say.
The adoption of the Affordable Care Act and its impact on Medicare and Medicaid is certainly very far-reaching. And the question is, how does that impact the insurance industry? Well, it's easy from a reading of the Affordable Care Act how it impacts Medicare, and that a large portion of the Affordable Care Act is designed to curb Medicare fraud, abuse, and waste. So how does that impact us in the insurance industry? Well, we look at how the Affordable Care Act imposes Medicare cuts. We're examining whether or not there's ultimately going to be a claim or a cost shifting, if you will, onto the property casualty industry because of the deep Medicare cuts. We're also looking at insurers taking a closer look at their Medicare compliance programs to ensure that they're compliant. Because of the deep Medicare cuts, Medicare is going to be trying to recoup as much money as they can, if you will, from the insurance industry. Consequently, insurers need to ensure that their Medicare compliance programs are on point and are fully compliant. The Medicare Secondary Payer Act has a great deal of impact upon Section 111 or insurer reporting. The Medicare Secondary Payer Act has been on the books since 1980. In 2007, the Medicare Secondary Payer Act was amended to include a provision designed to require insurers, now known as RREs, not only to establish whether or not a plaintiff or a claimant is a Medicare beneficiary, but also whether or not Medicare has made certain payments on that claim and whether or not those claims need to be reimbursed. So what we've seen with Section 111 is another layer of complexity, if you will, with respect to Medicare compliance, in that we have the Medicare Secondary Payer Act, which deals with, in large part, on Medicare reimbursement and conditional payments. And on top of that, for roughly the last 7 years, insurers have had to report certain information to Medicare related to settlements with Medicare beneficiaries. Now, the reason why Medicare wants us to do this reporting is because Medicare wants visibility into our settlements to ensure that Medicare has been reimbursed for any payments that they have made on the same claim. Workers' comp is handled very differently than so-called general liability or liability claims with respect to Section 111 reporting. You're reporting different events in the workers' comp space than you are in liability settlements. The thresholds for reporting are different. So it's two different animals when Medicare looks at these types of claims. Medicare has a better grasp on workers' comp claims than they do liability claims. Okay, but there's certainly two different types of claims, two different animals with respect to Medicare compliance. The reporting is handled differently, settlements are handled differently. Generally, the conditional payment reimbursement process in those two types of claims is somewhat similar. However, you may see the existence of more Medicare liens, also known as Medicare conditional payments, in liability claims than you may see in workers' comp. Consequently, insurers that handle liability and GL claims kind of have a heightened perspective, or should have a heightened scrutiny, if you will, around their compliance program and Medicare reimbursement. This is especially important in light of recent litigation that we've seen with respect to Medicare Advantage plans and also private cause of action recovery lawsuits that have been brought against insurers for failure to reimburse Medicare's conditional payments. Again, totally different animals, workers' comp, liability, and then now we're seeing the development of significant and very important litigation around Medicare Advantage plans. What we're seeing with the implementation of the Affordable Care Act and how that's impacting the industry, kind of in a tangential matter, is that we see Medicare having over $300 million over the next 10 years to add more contractors, recovery contractors. The Department of Justice is going to have more insight and visibility into CMS's databases, which means that Section 111 reporting and ensuring that the carriers are reporting correctly is that much more important. Because as everyone knows, there's a very significant penalty associated with failure to properly report to Medicare. And that penalty, pursuant to Section 111, is $1,000 a day per claim for the RRE's failure to report.
For more of our coverage of the 2015 RIMS conference in New Orleans, visit the RIN TV On Demand Library.